Hi guys, good afternoon. Just one more moment. All right, so I'm ready. So, this should go. You can all see my screen, right? You can all see my screen?
Yes.
Cool. So I have a couple of agenda items for today, which I want to cover.
Sorry, gone again.
But
Naval.
gone again. Let me stop share and share again. I don't know what, like, there's something wrong.
Now we get it again. Yeah, it's on.
You got that again? I don't know what's
Yes.
wrong, what's happening in Zoom. Just a few more seconds. Let me just see if it's something to do with the streaming. Like on my other laptop, I can see the screen now.
Yeah, I can see the screen as well. I can see the watch list.
All right. Yes, it's only the watch list I have right now. So let me open a whiteboard here. So I want to cover a few things here. First one is chart patterns. That what all chart patterns are important, what should be their time frame, how to identify. And then I want to talk about regression channel, which is one of the best tool, and Fibonacci. Then I have Q&A. If you have any specific questions in between, if any one of you have a different idea or different concept you want to discuss, or you want me to share my thoughts on that, let me know. If I can have your ideas, I can note them down and input them when I go live. One by one. Any one of you, like if you have any specific thing in mind that you want to understand, or any macroeconomic thing we're not sure of and you want to understand, let me know and we can focus on that.
Naval, how do you catch a momentum stop, like during the session?
Okay. I made a note: momentum or relative strength. Anything else? And this is only for you. So if you are not asked,
if you can tell us that how to use a regression channel on the trading view though.
Yeah, you need to share trading view. I can help you set that up.
Sure, Pati. Thank you.
Okay. So
Naval?
I'll ping you once I am ready with trading view.
Naval?
Trading. Yes.
नवल आप ये भी कवर कर सकते हो क्या, आप जैसे आप फ्यूचर कैसे ट्रेड करते हो?
Okay.
Yeah.
I'll show how to trade futures. Anything else? Anybody like?
Naval, I want to know when to use iron condor and different strategies and at what time.
Yeah, option strategies.
Yeah.
Can today, but problem is there are so many. It will take a good amount of time. So I'll show you how to use common ones and when to use them. All right.
Yes.
But maybe in next coming weeks, once I find time, because tomorrow is my day off. That's why I'm doing this session today. So whenever I have next time off, I'll try to cover option strategies because they are really, really interesting and we play well once we execute them.
Naval Paji,
Anyone else? Yes.
Naval Paji, I had requested about the CPI, your analysis and all. If I don't know if this is the right forum, but whenever you can.
CPI, not today. Adi, we'll do that most likely on Tuesday. But I shared my viewpoint on CPI.
Hanji, I've read that. And secondly, just about futures will be very helpful because I know nothing about futures. So whatever you can share, that will help. Okay. Thank you, brother.
Futures is covered. Futures is covered.
And how long will this session be,
Bhai?
Naval Bhai, approximately how long are you planning to do this today?
Yeah, I'm trying to keep it to 90 minutes. That's a fair time.
Got it. Thank you, brother.
Sir, one more question. It will be amazing because we are on TOS and it already has some settings. So if you can just help us just create new sessions so that I can actually follow your settings as a new one, that'll be super helpful. I think that historically I've not changed anything because once it gets messed, then did not get a chance. So that'll be super helpful if you can just talk about how can I keep settings independent of those two.
I am confused about what you said. Can you just try to frame it differently?
Oh, okay, sure, absolutely. So what I meant by that is, I think there are already some. I want to basically create your settings as an independent set of settings so that I can move between, let's say, looking at the chart your way versus looking at the chart, let's say, my way. How do I go about doing that? That's one.
Yes, that's a style which you can save. That's one second thing.
Perfect. Okay.
Anything else? Anyone else from the YouTube who are here that they want to have any questions regarding technical trading analysis?
Well, if you can also just go over your watch lists and how you're constructing them in terms of your, where you look at open low and open high in toss.
Okay.
Thanks.
Hey, Naval Paji, just one other thing, wondering if you could cover a brief intro into the covered calls. For instance, let's just say if someone is holding a certain stock and they're ready to let it go, would selling calls be the right strategy? And if yes, how does one go about it?
In this market, yes, it was. Definitely, it was good to sell calls. But you're not gaining too much by selling calls. That's one thing. You're investing too much money and you're making only 200 or 300 at max. Because now the main covered calls, which used to give good money, were Amazon, $60, $70. They used to give good money. Or Tesla calls. Now they're broken down into 1:20 ratio and they're not paying well. So we'll see how can we actually pick up the good covered calls based on the volatility. But remember, this is a volatile market. We can have 20% rally in a span of 15% rally in a span of 3 days. And then you can stuck in those calls. You will have hardly any profit if market goes up. Just remember that.
Right.
Relative strength, I've covered. Option flow, I usually don't check option flow during the market or before taking a trade. I do just when I'm looking at a setup for a confirmation that yes, in case something is coming on that. So I'll talk about that. I think we have a good healthy list of questions. So I'll start. from the very first and important thing, which is relative strength, where everybody is, let me share my screen now. You all can see, let me know when you can see the watch list on the toss.
It's not visible. Oh, there it is. It's visible.
I think like if you're on Zoom, then you should be looking at it right now. If you're on YouTube, then it's a lag of 10 to 15 seconds.
Yeah, now we can see it.
Navalpaji, this whole session will be on YouTube, right?
It will be on YouTube, yes. Because I don't want to be in a situation where I'm speaking something and then you're looking at something else. But you can hear me clearly, right? Without any lag. Anyone?
Yes,
Yeah,
so far so good.
I think sometimes your
Okay.
screen sharing just takes about 30 seconds to come even on Zoom. That's the only
I
difference.
really checked my internet speed. Like it's still 150 Mbps. I don't know.
No, I think it's something to do with
my
Zoom
Xbox.
and syncing with YouTube, that your screen sharing is taking time also on Zoom. But can you do something right now on your screen just to see whether there's a lag to that? Can you just change to, say, go to scan or something?
Yes, I will do that. I'm just trying to figure out if I can make sure that this latency is minimal.
I can see your mouse move, so I don't think latency is there once your screen sharing appears.
Okay. So let's start from the very first thing, which is the relative strength. Okay. So just imagine that we have a couple of levels on ES, right? That there's a 3660 level, 3620 level. Now, what I usually do is, in terms of relative strength, I come into this watch list. I check normally this ES. So supposedly in the day at around 9:30, 9:45 duration, this is flat to green, for example. All right. Then from my watch list, which I prepared last night, because that's the list which is coming from this watch list only, I just change it to percentage change. Okay. And I see how many of the stocks are green. And let me just share the full screen because we will require more. Let me add paint. So my simple logic is, when ES, and again, I do not use NQ, I use ES for my market levels. When ES is green, I do the next step. This is my first step. I check ES. If ES is green, I look at the list of stocks which are, like if this is green, let's say 0.5%, 0.5%, roughly double of it, which are 1% or higher. It means that if market, so this is my very first step. I look at all the stocks which are almost relatively double. Like if it is 0, for example, 0.00, it should be roughly 0.25, 0.5. If it is 0.5, it should be 1. If it is 1, it should be 2. If it is 2, it should be 4 or 5. That gives you a very basic idea that yes, when we are comparing the ES percentage, again, assuming this is green, flat to green, I'm looking at any stock in my watch list which is up 1%. Then I give 15 more minutes. So this is between 9 to 9:45, 9:30 to 9:45 period. All right. Then in the next 5 to 10 minutes, what I observe is that yes, if ES is slowly moving, let's say it's now 0.75, whether this has turned to 1.5 or 2% or not. If it does, that's something I will call as relative strength. That is a use case A. When ES also moves up, my corresponding stock gains substantially. Second thing, maybe ES comes down to 0.5 or 0.00. My stock was 1%, it only comes down to 0.75, or it remains to 1%. That is also a relative strength. So in these two use cases, this gives me an idea that initially these are my items which opened with relative strength, and now they are holding themselves with relative strength. Now what will happen here is that I have my ES number. Supposedly 3660 is my ES, good support area. Now market is at this area and this is 0.75% green. Now if it goes to 3680, the stock which I choose will be more than 2% up. So I am looking at my ES level and I'm looking at the relative strength of this stock. For example, it is Amazon. So if Amazon was 115 here, if it goes to 3680, Amazon will be 117. This gives me good area to make profit. This is called a relative strength. The same applies on the negative side. When ES is red and the stock, again, if it is minus 0.5, stock is minus 1%. And let's say the same example, 3660, Amazon was 115 and it was down from 117 already. Now, if it goes to 3630, this will easily go and test 112 area. So I know that this is relative weakness. And if it is relative weakness, I can sell this. Again, it all depends on my ES level. If ES is showing strength, I will try to find stocks which are stronger than ES. If ES is going down, I will find stocks which are weaker than ES. Very simple. The only thing is you need to only have limited focus area. Like for example, the watch list we prepare about 15, 16 stocks. You can compare them with ES. And then if you see the momentum or if you see the strength in them, ride along that. Do not fight the trend. That's very important. If something is showing strength, 90% of the time it will work. There's a possibility that yes, stop loss will hit, but if recovery happens in the market, that will be the stock which will be the first one to run. And that's where we want to jump in. Because these are the stocks, if they run first, they will run till the end. And that gives you a much longer period to ride on an option. Does that make any sense to you all?
Naval, I have a question. So, like you said that like it goes from 3660 to 3680, and like you find the relative strength Amazon, which is more, and you get in Amazon. But by the time it goes to 3680, when are you entering? I mean, you're entering it because you don't know whether it will go to 3680 or it will go down, correct?
See, that's why I'm saying that when you look at ES, you need to start the move from ES. If ES is forming a base, and forming a base meaning that yes, it's making higher highs or it is not making newer lows. Okay, that's one concept. Second concept is in terms of Heikeneishi, if you see ES is holding, let's go to the where it is. 1 second. Let's go to the screen. I need to clear all this. Let's go here onto the screen with ES. Friday, I mentioned about 3710, that if it loses 3710, we are in for a negative ride. All right. So this is the big fall which happened in the pre-market after those numbers.
Oh, I think you're not sharing the chart. Okay, now it is there. Okay, yeah.
I'm saying This was the big fall, which most of us would not have jumped on. We would have left, right? This was 37.10, which was our first target, which came in as per the sheet. Let me open that sheet as well in parallel. So this was 10.7, right? This was 37.10. Okay, and it was an evening star. It was below 12 EMA. So idea was that yes, if it loses 37.60, it can hit 37.10. So this was the first drop, which we could never ride. For people who are not doing futures will not be able to do it at all. Now, second time you can see this is around 8:45 where it tested this 3700 trend line, which is a long-term trend line, and bounced. Again, people who are doing 9:30 trade, they will not be able to enter. But look here, at around 9:30, 9:45 candle, this lost this trend area, 3700, and the trend line. This is where you enter. So we missed the move of 60 points, but we entered here. All right. So this means that it has lost. Now you can jump maybe at 36.90. Now you know the next area is 36.60 where it can find the support. So even if you missed from 37.20, 37.30, you entered at 36.90, and that gives you one candle, one full candle close after the morning. Now in this candle, if you see Amazon, and if this is 9:45 candle, if you see Amazon is showing weakness, and I'll show you an example right here. Let's go to Amazon, and again, I'll break it to the 15 minutes. So this was 9:45 candle, right? It was 117. Now compare. I'm just increasing this size. Now, this was our 9:45 candle. 9:30 is here, broke the trend, and this is right here. It came down. Now you see, it came down 10 points, and this was a massive gap. This opens at 9:30, right? So from 120, it is 117. It is down almost 1%, 1.2%. It is down more than 2%, right? This is, let's say, 1.2% it was. This is minus, this is -2. This is relative weakness. Now, you will sell this right here at around this stage. Let's say you entered at 117 area. Now, here you will let it sell, because options are pretty quick. If you want to like do 2-3 lots, you will carry them more. If you are doing high volume, then a small move can give you money. So depending on whatever your risk profile, you will next wait for the support. Now the support here comes at 36.60, where it is finding the support. You see, it is finding the support. In this case, it is not finding any support. Even if it was consolidating at this time, 1 second, I'll just move here. It started to find support at around in this area. This moment you can exit your position. Or if you entered here from 117 to 118, 117 to 115, you can also exit. Or you can wait for this consolidation, because consolidation can further lead a move down.
So Naval, Friday ko we didn't do any short on Amazon, correct?
Yes, I only did 2 trades. One was Tesla, and another was Goldman Sachs.
That was long, correct?
Sachs worked. Yes, and I did long because in the negative market it was showing reasonable strength. And why I was trying long there, because there was good consolidation in this area, 36.60 to 36.80. So I thought that yes, it may hold this area and try to bounce, and it did. It went to 36.95 once, but later on it just gave up.
Yes.
And
तो
I
आइडिया वाज कि अगर मार्केट रिकवर करेगा तो गोल्डमैन ज्यादा जम के रिकवर करेगा बेसिकली, करेक्ट? दैट वाज आइडिया. Okay. ठीक.
The same
Another
way,
question.
one second. Now, the second point which we had was 3660, and I posted that chart in the group as well as on Twitter, that if 3660 goes, we are going down to new lows in 3620. So the moment 3660, it was holding here. The moment it lost, it just went on to make the new lows for the day. Now, this is what you need to observe, that if it is holding, and when it is holding after consolidation, it usually gives up. If it has to bounce, you will see green candles on the higher side. But in this, it was making a bear flag and went down, and that's it. Second important thing which you should check while doing the trading is that this 12 EMA and 34 EMA. If 34 EMA is higher than the 12 EMA, meaning the red line is above the green line, it means you are in a negative trend for that particular day. That's why I was not doing any index trade. I picked up trades which were stock specific. Same thing is here. Amazon 1234, they reversed. And it tried, and one very basic concept in technical trading is that these are averages. The green line and the red line. Candle will always come back and test that average, no matter what. The average will come down, the candle will go down, eventually they will meet right here. They will meet.
Okay.
So if you are too far from the candle, right, it's like a magic touch that the candle will come and test this line, or they will come together. So better to enter above the candle so you can test the next one, or if you are inclined to short, sell near the candle so that you can test this one and bottom.
नवल, एक क्वेश्चन, एक बहुत छोटा, जैसे लाइक जैसे वो जहाँ पे आपने वो ऊपर एक रेक्टेंगल बनाया ना.
Sorry to interrupt you. We have people who do not understand Hindi, so if you can speak in English.
Oh, sorry.
If that's not an issue.
Sorry. Yeah. So what I was saying is like that rectangle which you have in between, where the slide went out, where it was basing, and you had that 100% line, and then it just fell from there. Correct? Yeah, this one. So do you look for 15-minute closing before you decide you will exit the trade, or as soon as it goes, okay, you wait for the 15 minutes to close?
I prefer 15-minute closing. I prefer 15-minute closing.
Okay.
Sometimes what happens is it spikes in, spikes out, spikes in, spikes out. And if you have options which are placed at like physical orders, they will get executed.
Got you.
And the moment they hit your stop loss, they will reverse.
Yeah.
Right. It happens with me in the past. Even like for Apple, I had the lowest stop loss in the day. It hit that, made that low, and then reversed. And it closed at 140. And we had Apple 145 puts, 146 puts. So it hurts sometimes that you made the day low.
Okay. Yeah. Thank you, Naval. Yeah, I'll just be on mute now.
No problems. And I hope like this gives you clarity on how to find relative strength.
Naval, you've always taught us that gaps get filled. So the problem I see with this is that, like Amazon, it has a gap down. It could also potentially turn around and fill the gap. So how do we know that it'll keep going down only, or it may fill the gap?
See, if everybody look at the sentiment of the market at that time and look at the relative strength of index and stocks, it will give you a fair idea that yes, it is going to fill the gap or not. Like, for example, you talked about Amazon. So let's open Amazon. Okay, now we have a massive gap here, right? Where it closed at, it made a low of 119 and the high here is 118.17. So a $1 gap right there. Now, this was the last time it came to this trend line and it's holding that area. Same is now. It can come to that 113, 111 range, which I've mentioned multiple times. If it comes here, it will bounce or it will go down. There are only two possibilities here. Or third one is it just hang alongs to this trend line. So possibility is one is it stays here, it bounces, it goes down. If it bounces, it will try to test the 12 EMA first. If it holds above and closes above, it will try to fill the gap. If it fills the gap, it will try to find the next resistance, which is the 12 EMA and this 23.6 Fibonacci. So when it is bouncing, you need to look at the levels where it will find the resistance and you can exit your positions there. When it is going down, like for example here, it lost the 23%, it will most likely test this trend line and then go to the 0%. Here what it did was it tested the trend line. So if you were short from 121, you got at 114, it consolidated. And once the consolidation was done, it went up. It opened above the 12 EMA. So there was a massive gap which was created here. That gap was filled on Friday. So depending on your strength or your trend lines level, you need to evaluate whether it will bounce or it will go down. If it goes down, look at the next support. If it finds the support, it may bounce. It is simply like, remember in physics, we had waves, like sine waves, right? They go up, they go down, they go up, they go down. Similar in trading, technical trading. If they find like, they are like waves. If they find resistance, they will hit resistance. Either they will break it or they will come back. Then they will try to find the support. If they find good support, they will bounce. If they find weak support, it will break, it will go down. So it's a very simple way of taking it. If you keep on comparing it with so many indicators, so many fancy things, it will just make things complicated. Price is the real element here. Price is telling you, yes, I am here to sell me. Price is telling you, I am here to buy me. All right.
And you also advised one more thing in the channel, which is that do not trade the index, rather trade individual stocks.
Yes,
Why
because
is that?
index is very, very fast moving. Like if you're trading futures, right? If you have a 20-point stop loss in this volatile market, 20-point stop loss is $1,000 stop loss. It will simply wipe $1,000 in 1 or 2 minutes. So it's not easy to trade index. Index trading is good when you have free liquidity like what we had in the past. Index trading is good when you have clear trends. Index trading is not good when you are volatile market. Whenever you have a volatile market, either go to stock specific trades or sit down.
By volatile, you mean choppy?
Volatile mean it moves a lot. Choppy is a very tight range. Choppy is not for trading at all.
Okay.
Volatile meaning that yes, it can 2-3%
Too
up
many
one day and then.
Okay. And what are these green arrows and red arrows? Can you just tell us, are they reversal indicators?
No, they're nothing. They are not nothing. They are just EMA indicators. You just EMA is going up or EMA is coming down. So there's nothing fancy. If you go to EMA, it will ask you to show your EMA trend. So this is EMA trend. Ali is asking what is FVG strategy. I have no idea about FVG strategy. If you can give me some more detail, Ali, I can answer that. That's good, Mitchell. It's hard to trade index. All right. Then relative strength, we have the scans. So guys, this is a scan which is open high. Again, this is based on the price level. First, I would require you to do a simple scan. It's like add a new scan here, a query. And once you do that, Once you do that, you will have this area. So in this, choose a study, which is custom. And once you choose custom, you will have this screen open. Now, this is a very simple query. You can click on add condition. You're looking at price, choose high equals to price open. And this is for 1 day because we are using 1 day. So if you have a condition where open is equal to high, save it. Same thing, open is equal to low, save it. You will have these two conditions. Now, in this case, you have option of all meaning a and condition. If you are like from any of the technical background or engineering background, you know there's a operator, Boolean operators, all or and or or. This is and this is or. So if you choose any of these conditions is true, you will fetch a result. If you put all, both conditions have to be true, which will never happen. A price cannot be open equal to low or an open equal to high. So either you can have 2 scans or you can have 1 scan. I prefer to have 2 scans into this one. So what it does is, if you run this, like for example, Splunk open at 7809, 7809. What it tells you? It tells you that there were sellers right on the open. And one thing which I have told many times, whenever you see SPX open equals to high, never go long on the index on that day. Never ever. This is a thumb rule. Whenever you see SPX, because ES is 24/7 almost. SPX is not 24/7. It opens at 9:30. And this is the scan which you can run at any time. If you see 3706 open, 3706 high, sell it, and sell it. You will only change if something totally like big catalyst, something positive from the Fed, or something really meaningful happens. Only then exit your position. If you see this, the idea is to buy SPX puts and sit down. Nothing else. You do not have to do anything else. If open and low are same, buy SPX call and sit down. If you cannot do anything, just do this simple trade. This will not happen every day, but whenever it happens, make full use of it. So this is the scan which we talked about. Now, watch list and how to pick up, I've shared. Futures. So futures, I'll go back to the whiteboard again. So we have futures, which is known as ES. It is a 50 lot size. It is a derivative of index SPX. SPX is a constituent of 500 stocks. ES is not a constituent of 500 stocks. ES is an indicator that yes, I am a future, which on expiry will become the derivative. Like supposedly, I'll give you an example of futures from gold. Okay, let's say gold today rate is $1,800 per ounce. Okay, it has a December future which is running at $18 and $1,810. Now this is the current price. CMP, current market price of gold, and this is the future price. Now, each of the future has an expiry, which is 3 months in US market. So why we not buy gold and why we buy futures? For buying gold, you need to spend $1,800. And if you're buying futures, you are only paying about $8,000 for almost 1,000 quantity of ounces. So if you have to buy this, you have to pay this much money in your account if you want to go and buy a physical gold. If you want to buy a future, what you need to do is you need to pay just $9,000, and then you can have this future with you. Now, this future will expire on 3-month time duration, which is usually mid-September, mid-December, mid-March, mid-June. Now, when they expire, the price of the current underlying instrument, which is gold, and the price of the future becomes same. Now, it has a premium because it is available cheap. Second thing, you are paying less money to hold yourself a reasonable amount of gold. And on expiry, you can take a delivery. It's like, if I give you a simple definition, you're buying a contract that if on December, let's say 15, I'm just taking a random date, this future expiring, you are ready to buy this gold at $1,810. Maybe the price is going to 1,900 on 15 December. You don't know. At this moment, you are buying this price 1810 and you are fixing your price for the future. You are not sure whether the price will go up. You're not sure whether the price will go down. So you set up a price. For that, you set up pay an extra premium from the today price. Today is 1800, you are paying a $10 premium to allocate your asset. Like for example, you do the flight tickets, right? If you are trying to buy a current day flight, next day flight or a week flight, you will find it expensive. If you're trying to buy a flight which is 6 to 8 months out, it will be cheaper, right? Same logic is here. It's the demand and the supply. Right now you think that it's going to go higher. Let me buy now so I can sell it at a higher price. Similarly, futures can also be on discount. It could also be at 1780 right now. It means people who are thinking that by the time it reaches to December 15, it can come down to $1,700 or less. So why not I sell it at 1780 right now? That if it goes down to 1700, I'm still saving $80 to it. So there's also a possibility that yes, futures may have discount. So this is the concept premium and discount, that you are setting up a contract and you're setting up an obligation that yes, on this period, if I'm holding this future and if I exercise my future, I will have to take a delivery of this much of gold at this price. Same thing happens to ES. You are trading index and you are trading a future. The future can be on a premium, can be on a discount. There is no physical delivery of SPX in ES, but they are derivatives. So it is what happens. Now, derivatives can be of different size depending on the risk. Derivatives like SPX is 100 lot size, the futures options. ES is a 50 lot size. MES is a 5 lot size. So on a single tick move, 1 point move on ES, it will give you $50. 1 point move on the negative side will take $50. This will take $5 on the negative side and gives you $5 on the positive side. So this is a very simple future explanation. Now you can trade this 23 hours in a day. You can only trade this SPX in the live market. This has future options. This has future options. This has future option. It does not have a future. The future is this, which is ES. Same thing is for NDX. You will have NQ. You will have MENQ, MNQ. Same is for Russell. You will have RY, RTR, RTY something, and Dow Jones for YM. So each index has a future, and these are global derivatives. Why we need futures? Because across the globe, the funds invest in the US market. and they want to invest through these futures. They want to hedge their positions with these futures. In case some positive thing is happening, they want to ride along by adding more open interest into the futures. If they want to go down, like in case like there is a big war between China and Taiwan, and they want to hedge their positions, they want to sell futures to secure and hedge their positions. That's why we have futures. All right. So futures are
Naval,
risky.
Naval, I have a question. So, like, is there like how in call there could be a max loss? Like, you know, your what could be your max loss in future? Like people say it's very dangerous. Like you can
Yes.
lose all your account and all that.
Yes. I lost 40,000 overnight on futures.
Oh, so it's dangerous not to play right now. I mean,
It is dangerous, and sometimes even if you put a stop loss, it may not execute it.
Oh, okay. Then never mind. Yeah.
It becomes dangerous.
Okay.
So it happens that, let's say you have ES futures. Okay. Went long at, imagine today is pre-COVID. You went long at 33.50. Now it is trading at 33.95.
Okay.
Let me clear this. So you entered at 33.50 and it is trading at 33.95. So you are actually at a gain of $2,250. Okay. You place the stop loss of 33.50 overnight and you slept. Now, possibility is like what happened in COVID, that US was closed. This opens at 3,000.
Oh man.
And it happened, right? So now you are in loss of $17,000 per lot.
How do you calculate that?
It's
like
$50 per move. Like
$50.
if it is 33.51,
Yeah.
you are in gain of $50, $52, $100. Every $1 move, $50.
Okay.
So
it's
just now it is, see, these can happen. And even if we put a stop loss, there is a possibility that this price never came and it never triggered. So if it
because
opens
of gap down, correct? Because of gap down.
Gap down. Now, in that case, you open and you realize what $17,000 isn't a small amount.
Yeah.
And imagine if you had 5 or 10 lots, you are done.
Like I heard that people do hedge, like they take the future and then they buy the puts and do some hedging. I mean, just to limit some losses, correct? Like,
see, if you're buying the future and selling the call or selling the puts, you're only hedging for a certain amount. Selling options is not a good trade when you're buying
not
options.
to sell option. So say I go long on future, but I buy some put just in case if it goes reverses, correct? So I can hedge, but then again, it's still very dangerous, correct?
It is very dangerous because, like, again, as I said, option will open at 9:30.
Yeah.
And maybe in the night you opened at 2 o'clock, got up to pee, and then see, oh, 17,000. You will not have the courage to wait until 9:30. You will panic and you.
Exactly. Okay. Thank you, Naval.
All right, someone had raised the hands. Some people, Ali, fair value gap, I have no idea on that. I have no idea. So I cannot give you any information on that. So we covered relative strength, we covered futures. Someone was asking about how to save the styles of. So if you go to the charts, there is the option called style. You can save your chart pattern as your style, my chart pattern as my style. So later on, you can come and switch between your mode and my mode, or any other mode. Like if you have some other setup, you can switch between any of the setups you have. All right. So we covered about that. Then I wanted to cover price action and regression channels. So Bikram, do you have your trading view open? If you can share your screen and then we can set that up.
Naval, one quick question while you are here. If you
Mhm.
can hear me.
I can hear you, yes.
Yeah. On my regression channel, I could only see up to the current date. How do I extend it to the future, like let's say into November?
Right, extend to the right.
Right, okay.
Just right click on this and extend to the right.
Okay. And do I need to set a time frame or it does it automatically? Like until what point
Automatically
into the
follow
future I need?
lines. See, one very basic concept between the trend lines, regression trend lines is if your price action is away or outside of this top line, come on, this top line or this bottom line, then you have to adjust your what we call regression channel. Otherwise, it should remain in this range. This is the trend which is coming from top to the bottom. See, it respected right here, respected this right here, respected it right here. At the bottom, it is doing all right. Right, respected it here, respecting it here. So if you see on a very longer term horizon, Amazon is making a massive inverted head and shoulders. You see, you can clearly see this, right? So if it goes out, let's say here, I will change because then I will look that yes, Amazon is moving in this direction. Let me change my regression channel. I will cancel this one and I start new regression channel from here in this direction towards the current, and then I will put extend to the right.
Okay, thank you.
Vikram, are you here?
Yes, sir. Paji, Hanji.
Can you share your trading view? Let's go and check that. Let me allow you to share your screen. Yes, you can share your screen. Let me stop share and you can share your screen. Yes. So in this, I remember we have a trend channel. You can also search here trend channel. There's some, I remember because I don't use, but I remember this. What do we call? I don't remember the username. The user had actually this regression channel, quadratic regression trend channel. Can you try this quadratic regression trend channel at the bottom? Scroll down, please. Scroll down, scroll down. Scroll down. Write this quadratic regression channel. Start from the top. Or pick up any ticker where you don't have any drawings. Easier for you to manage it. This is what it came, right? This is the regression channel which came out, or is it yours? ये RAF linear regression channel by DGT. Just go up, go up, go up, go up, up, up. That's what I use. RAF regression channel. Yes, this one. Place it anywhere just for now. Oh, it is still not a cleaner one. Can you right click and see the properties of it? Can you do one thing? Add more standard deviation lines, make it to 5. Okay, and go to the top. Zigzag deviation to 0%. Click OK. Still giving the same thing. Can you give me the control? And I take the control. No, I cannot do that.
I don't know how to do that. I'll happy to do it, but I don't know how to do that.
That's all right. So I'll make a note and I'll check on exactly how this channel you can use, because I did set that up in TradingView some years back and it was fucking fine. So I'll search back and we'll update you on the channel.
Thank you, Paji. Thank you so much.
Can you stop sharing so that I can get the control back? All right, so we did options and strikes. So people who are into options, like me, when we are looking at the relative strength, the first thing you should notice is wherever the volume is higher than the open interest. If the open interest is there and the volume is higher, try to add that option. I usually pick up next 2 strikes, but as in routine, if you see much higher volume than the open interest, you should run into that. It doesn't matter you buy 1 week, 2 week, 3 week. If you are looking at a right entry area, you will gain. If you are at a wrong area, it doesn't matter whether it is 1 week, 2 week, 3 weeks, or 4 weeks, you will have losses. People think that yes, it will turn around and will give you profit. No, that happened because Fed was infusing so much of money that nobody was worried about the asset inflation, fake asset prices. So now that has been clearly decimated by Fed. So you will not have a clear picture. So there's no point investing so much money on a 3 week or 4 week option rather than have a small option near week, put a clear a stop loss, less quantity. If it works according to your plan, execute it. If it doesn't, exit with a small loss. Do not hold the option unnecessarily. And in this market, make sure you have reduce your size. Do not compare yourself to anybody. If somebody is posting $1 million gain, it's his risk. He can take 1 million gain, so he can also take a $10 million loss. Same thing for you. You can see that whether you are happy to make $200 a day, $500 a day, 1,000 or 1 million. You have to define that yourself. If you do not do that, you are going to lose. Trading is about 2 things, emotions and your risk management. If you know when to enter, if you know when not to enter, you will definitely manage your account Second thing is risk management. You know when to go big, when to go small. This market is very volatile, very difficult. Go small, 1 lot, 2 lot, 5 lots. If you are sure on a setup, if you are fine, even 1 lot will give you a good amount of money. All right, any other questions, guys?
Once you started trading, like what was your risk management strategy in the initial phases?
Yeah, initially, honestly, I started trading when I was in college. Okay, last year of my school, first year of my college, 2002, 2003. So at that time, I started trading very small just to pay my bike's petrol. That's it. So I was not doing very big trading. In 2008, yes, I did really, really good because I had a beer mindset and I just went on short and short and short. So I made good money at that time. So I did not understood risk management in 2009. Once I made big money, I used to go with like very heavy quantity. Like at that time, I imagine, or if I remind myself, I used to have like 50,000 State Bank of India stocks at one moment on margin, which was a huge amount. And I lost very big on that. So from 2009 to 2013, I really struggled on my risk management. I have to pay so many people good amount of money just to tell me how to manage it. But end of the day, I realized nobody can teach you this. It's just that you need to figure out what is your appetite. Because market is something which will take money back, no matter how strong you are. It's just that when you know when to stop. So I had issues with risk management, but now I've reduced my option sizes to 5 at most, and I am doing much better than I used to be.
So do you have a strategy where you think that, okay, for today I had made this much amount of money and that's it, and after that I'm going to settle the company?
Yes, I do 2 good trades, 3 good trades, and that's it. I do not trade more.
Perfect. That sounds good though. Yeah.
And the other thing which I do is I cash out and pay my bills.
Every week?
No, whenever I made money.
Okay, got it. Thank you.
Because it's not like I will not have losses. I will also have losses. But when I make money and I think I can cash out, I do cash out and I pay my bills. And that what's like, if you put more money on your option account, eventually you will lose. But if you keep on paying your credit card bills or some things you want to buy from it, you will start to love it because now you have still the same amount you started with, but you have something as an asset or you paid your credit card bill. You will feel good and that will boost your confidence. If you will make, let's say, $5,000 in a week and you put the same $5,000 again in the option market, 2 weeks, maybe 3 weeks, you will end up on the same track. You will lose that.
It happened with me. It exactly
100%.
happened with me. I made money. I was carrying on with the same amount of money, whatever I earned, and I lost everything within the next 3 to 4 weeks. Though.
Yes. So it's better. Imagine yourself, if you would have paid something and you wanted to buy something from that profit, that would have given you confidence. I have made something. Right? The biggest mistake what we do is we reinvest that money. We never cash that out. And I encourage people to cash out and try to play minimum. It does not matter. You have 500, 100, 1,000, 10,000. If you are $100 account, if you can make $20 on top of it and take out $20 back end of the day, it pays for your lunch and dinner. What's the harm in that? You were paying from your own pocket. But if you get that extra thing out from the market, you're saving $20 for yourself. People do not understand that. They think, oh, I have 5,000 and I'll become 50,000 in just few days and 100,000 in this day. Instead, they keep on just pushing more and more money into the account and keep on losing. Stock market will give you every time a single chance to exit, take that chance. Never ever let it go. If you are in a loss, it will always give you one chance. And I'm telling you honestly, it will give you one chance. Either it will come down to maybe 5% loss, 0% loss, maybe some green, but it will give you one chance to exit. If you do not exit, the moment you think, oh, it will recover now, let me just wait. The moment you think like that, you will done. It will reverse and you will lose. Cut your losses, extend your gains.
True.
See, figuring out these levels is not a big deal. Executing them properly is a very big deal.
Naval, I want to understand what triggers you to exit when your trade is moving in your favor and the candles have.
As I said, I have a defined goal. Once I reach my goal, I exit, no matter what.
Even if you think, even if it looks as if it's continuing.
I just keep one runner left, let it run.
And then you put a trail on it or what? Like a percent trail or like a.
I just leave it.
Just leave it. Okay.
Yes.
Paji, this
See, nobody can trade the entire move. It will be like superficial to say that, yes, I traded the move from right here to right here. No, it's not possible. I can do from here, maybe until here. That's it.
Okay, so this was
How many
where you were making the money though. But let's imagine if the very first trade in the morning you lost it, and then how do you control the emotions at that point? Like I lose the first trade and then I'm having that urge, okay, maybe my next trade going to be the good one, and I keep on doing it, and that might, like, that is a revenge trade, and then I'm keep on losing the money though. Like how do you control that emotion if your first trade goes wrong?
So Friday first trade was Sikka, right? Loss of $150. And I told everybody to put a stop loss of 1.2 because I was not sure on that. Then once the stop loss was done, this loss was there. My loss was small because I knew I have to take only this much risk on my trade. Okay. So I was not kind of negative minded. Second thing, I waited and then observed where I can find a good setup. If that setup is working, it was negative market totally, and Goldman Sachs was 300. I jumped onto that and it went on to make 304. I took 3 lots only, not many quantity, same investment, same $150 risk. And then once I made $500 on that, I exited. Tried again, second time, exited on cost. Now, I did not try to fight and trade Tesla. It has to go up because I bought it. It has to go up. No. If it is not working, it's not working. Find something which is working in the market. Do not rush into a trade. If it is not your day, it's not your day. Do not try to see if I made a loss, I need to cover that. No. You will have ample opportunities. The only thing which should be focused on, if it is the right setup or no. Imagine yourself, let's say you're doing a university exam. You have prepared well for your exam. You attended all the classes. You did all the assignments. You know what you have done. You know everything. Now, when the exam is in front of you, you can easily write it. Imagine yourself when you just know nothing about your exam. You just wake up from your sleep, went to the university and giving your exam. Will you be able to answer anything? No. Same thing is here in stock market. If you find something which is working or is in the setups or is in the required metrics you have defined, pick that up. And how can you pick up? If you have a small watch list, you observe the 5, 15, 20 stocks, you have made your levels, you have planned yourself, you will have an idea that, yes, this thing is not working for me. Let me see this. It is behaving around this level. It is finding the support. Let me just try that rather than just jumping on any trade you see.
Got it.
And patience is something which you need to have.
Thank you, Paji.
There was someone who was asking in between. Okay, then I'll cover two topics now: Fibonacci extensions and Fibonacci retracements. Now, why and when we use Fibonacci extensions and when we use Fibonacci retracements. So Fibonacci is a mathematical expression which has few rules, and these rules are the foundation of Elliott wave theory. So Fibonacci has important percentages: 23.6, 38.2, 61.8. These are very important percentages in Fibonacci. Not so important percentage: 50, 78.6, 100, and 0. So these are super important. These are okay types. Now, when we are making Fibonacci levels, you need to use your regression channel. Like we have this regression channel, right? Where we have this trend line. And then lines here. You should make a Fibonacci, irrespective whether it's an extension or a retracement, whenever you see the low making near this channel, here, here, or here, or high making right here, here, or here. So you will do, when you're doing Fibonacci extensions, you will see if there's support in the last few years, last few months, whether it found the support right here. You start from here, then look at the next high level, which is around these trend lines. And then come back to the same concept where you find the support near the trend lines. This is a combination of Fibonacci with regression channel. And the levels which come out of it are really, really great. And you have seen all those levels which I post every day. Those levels work out really, really good. So Fibonacci, you need to keep this thing in mind. When you're drawing Fibonacci, you need to make sure you're using a regression channel. And within the channel, you will find the lows, highs near the resistance. This is the main trend line and the support. If you do that, the Fibonacci numbers which will come out, you will see the candles respecting those levels to the point. Second thing, in Fibonacci, we have these levels: 100, 78.6, 61.8, 38.2, 23.6, 100. Now I'm going to give you a trail. If you start from 0, you will find resistance at here. If you break this, you will find resistance at here. This is 15 between. If you break 38, you will not find resistance at 50, a very minute resistance. You will hit 61. If you fail, you will come down to 0. If you break out, you will not struggle at 78, you will hit 100. If you break 100, you will hit 161. If you fail here, you will come down to 61. You will not stuck at 78. And when you're coming back, if you are 61, if you lose it, you will most likely come back to 0. So retracement from 68 is 0 in straight line. You will not find support here. Very often, you will find that 38 was a weak support, 23 was a weak support. So rejection from 61 is really, really bad. Rejection from 38.2, you will find only 23.6. Rejection from 23 is consolidation. It will struggle and then will bounce. These are few rules which you keep on mind And when you are drawing your regression channels or retracements, you will see this. Now, when to use extensions and retracements? So extension is when you're looking for a move, which, like, supposedly this is a stock, Amazon. This moved up, came down, and you see the strength in it and you're expecting it to go higher, you use extensions. So A, B, C. If this is a setup you see and you are looking for a direction which needs to go higher and you want to see where will it find the resistances while going up, you will use extensions. If you're looking for only a bounce where you do not have this leg AB, you only have BC. You want to see that this is my top, this is my bottom. If it bounces, where it will bounce. In this case, you will add retracements. There is a clear distinction. Here you want to see an extended move based out of this initial move. You want that, yes, stock will go up. Here, you are only looking for a bounce back to the previous top level. You will use a retracement.
Naval, can
This you
give an
can compare.
example of the extension? Where do you stop the extension? Like, how does that, like?
You do not have to stop the extension. Usually it is up to 461%.
Okay. No, like in toss, you create the extension, but then, you've got to kind of give it some sort of scale, right? So how do you scale? Maybe you can just if you show the example, I think it'll be clear. But thank you.
I have this scale: 0, 23, 38, 50, 61, 78, 100. Then I have 161, 261, and last one is 423. And that's it. I do not go beyond than that. Because if I cross 261, then I have to change something into my charts because I'm well above my initial area. So I have to look at this one more time. But these levels, 0, 23, 38, 50, 61, 78, 100, these are very useful levels. You can click edit. You can add as many as you want. I have added only these coefficients and let them. People add more. It's up to them. I am fine with these levels.
So Naval, I've just started recently using these Fibonacci levels, and I'm talking of the ABC setup that you explained just now. So A, I'm taking as the COVID lows, and B for whatever was the top for the stock, for example, Amazon, and C is the current level. Broadly speaking, does that make sense, or I'm trying to find?
It makes sense, but then in that case, your range will be very, very big. You can take that as on the weekly charts or monthly charts, but for day trading, that's a very big range.
For long-term investing, does that range make sense?
You are mixing so many things into one thing. Long-term investing is nothing to do with technical trading. Long-term investing is based on fundamentals, based on economy, based on profit margins, based on growth. It has nothing to do with technical trading. Technical trading is basically for making short-term money.
Okay, so on what time frames would you generally, as a best practice, advise to use these retracements and the extensions?
It's
Fibonacci?
always on daily.
Always on daily. Okay.
Yes. Anyone else? I have 10 more minutes. Otherwise, I'll finish it. All right. If no one has any other questions, then.
Hey, Naval, this was really useful. Thank you very much.
Thank you, Paji. Thank you so much, though.
Thank you, Naval.
Sunday, man.
Hopefully, you can use this information and
Thank you, Naval. Bye.
Thank you. Good night. Bye-bye.
Thanks, Naval.